My name is Jack Hanney, and welcome to this week's edition of The Insider. The United States, Donald Trump, Scott Bessent, and the Fed have coordinated a once-in-a-generation effort to help the flailing Japanese yen. That is right. The U.S. Treasury has stepped in a coordinated effort to help the yen, with concerns that the yen could crash as it has been on a steady decline and needed assistance. Now, this is not generosity on the part of the U.S. and Japan. The U.S. needs a steady and supported yen in order to conduct global commerce and trade, as well as Japan's purchases of U.S. treasuries. So that is another concern that is boiling right now below the surface. The Magnificent Seven stocks have been hammered in 2026. July was an absolutely terrible month, and what we are seeing looks like a classic melt up in tech stocks. They're saying that there is no slowing down on their investments into AI, their CapEx spending. Meta announced that they are raising their AI spending, as is Amazon, as is Google. So the amount of cash that they are burning through, if you recall last week, for the first time in a decade, Google is actually running at a negative cash balance due to its investments in AI. A lot of this looks like a bubble, as many are concerned that will they ever be able to realize the return on these investments into AI? Many say it really looks nearly identical to the dot-com bubble of 2000. In fact, just last week, there was a company reported that had 32 employees that had zero revenue. So zero revenue, no products, 32 employees, and a valuation of $32 billion, an AI company that NVIDIA had committed $5 billion to. So retail investors right now are looking at tangible assets, physical gold and silver. Right now, this opportunity to get into gold at $4,000 and silver at $60 an ounce, it is quite obvious, as gold has been trading sideways at $4,000 an ounce for the last 60 days, silver at $60 an ounce, that we have reached not only a psychological, but a financial support there at the $4,000 and the $60 an ounce. Goldman Sachs is calling for $4,900 an ounce gold by year's end. Wells Fargo, $5,300 to $5,500 an ounce by year's end. Across the board, big banks, JP Morgan, Goldman Sachs, Swiss Bank are forecasting $5,500 an ounce to $6,000 an ounce gold in 2027. They're saying that gold and silver will be the trade of the second half of 2026, and going into 2027, that silver and gold will take out those highs that we saw in January of 2026. I am not a certified financial investment advisor, nor do I give tax advice. If you also recall, Vanguard and Goldman Sachs both warned of a lost decade ahead for stocks. Meanwhile, all economists and big banks say we are still in the early stages of this bull run in physical gold and silver. So please visit us at www.patriotgoldgroup.com or call 1-888-488-5190. Again, that's www.patriotgoldgroup.com or call 1-888-488-5190. Thank you, and I look forward to speaking with you next week on an episode of The Insider.